Yeah, well, I think the bigger thing that markets were worried about, at least the short term here, was everything that's going on in the Middle East. And I think the big concern was if you did see some sort of closure of the Strait of Hormuz or you saw any sort of damage to energy infrastructure, that is actually a much bigger risk that inflation's going higher from there. Because realistically, if you do see oil going above $100 a barrel, which people talk about if the strait were to be closed, you could easily see inflation going back above 5%, and you can see the gas prices above $5 a gallon at the gas pump. If that is no longer as much of a concern, I think that's what the markets are telling you after today, when we did see some sort of response, and that was not the answer. You're seeing oil prices are coming down, which means the inflation story is actually more positive and more realistic that the Fed can lower interest rates. Because if energy prices have been coming down, which they have been over the last couple of months, that likely may offset some of the tariff impact of inflation. So that's really what markets are weighing out here. And they're more relieved to see what's going on in Iran than the upcoming tariffs, at least at this point in time.
Okay. Mike, how do you understand it? Some of the language here from the Fed speak, given that we haven't yet seen what the full tariffs are going to be, let alone felt the full impact of the tariffs.
No, we haven't. And you know, Chair Powell has been pretty resolute in withholding judgment and trying to preserve this wait-and-see type stance. And I do think the majority of the committee is largely there as well. That's what, you know, the outlooks from just several days ago at the Fed decision suggested. But I think a case has built as the economic surprise indexes have weakened, as you've seen some deceleration in job growth, and as you got a couple of friendly inflation prints. I think internally the direction of travel in terms of which way to lean and would be maybe to try to get easier sooner and fit in another rate cut. I don't know that that means all of a sudden July is in play, but I do recognize that there's some atmospherics around this. And it's fun because, as you said, we don't know what the final tariff terms are. We don't know how they're going to be implemented or when. And we don't know how much of that might be passed through and show up in inflation readings. I guess you have to have a theory of the case for all those things, or just say it's the Fed's job to sort of look through all of that. So it creates a sort of live debate. But from an investor's perspective, it's probably net bullish because at least the debate now includes more of a voice on the dovish side.
Courtney, do you think a peace premium is being priced into the market here?
Well, I think after today, that's really why you're starting to see the markets are recovering here. Energy prices are coming down. I think people are optimistic that there's going to be either no further escalation or maybe some sort of resolution that comes to this. And if that does in fact happen, you will see oil prices come down like you saw today. I think that is ultimately a bullish thing for the markets. So, you know, we're still in the midst of this. I think we've got to watch the news day to day. But based on everything that's been happening, that's absolutely what the markets are pricing in.